Wall Street fell for the second straight month on the bond jitters as the U.S. 10-year Treasury yield hit a 16-year high, following Fed's hawkish stance on the monetary policy. The U.S. headline CPI accelerated for the second straight month to 3.7% year-on-year in August. Markets were pricing in one more rate hike and bring the interest rate to between 5.5% and 5.75% by the year end. Both the S&P 500 and the Nasdaq posted the biggest monthly decline in 2023. 10 out of 11 sectors in the S&P 500 finished lower for the month. At the same time, the energy sector outperformed due to the jumping oil prices, which positively correlated with inflation. Impacted by the broad sell-off, the IPO frenzy seemed to be short-lived, with ARM and Instacart pulling back to just above their debut prices after a one-day price jump. However, signs of a heating up capital market could remain a bullish factor for equities. Notably, most mega-cap tech companies' share declined throughout September, with Nvidia leading losses down 10%, followed by Apple and Amazon down 9% and 8% respectively. At the same time, Tesla and Meta platforms shares were slightly higher. This brings back an old topic. Can AI stocks sustain their bullish momentum? The upcoming third quarter company's earnings will be critical for market trends on whether earnings growth can justify these stocks' valuations. The U.S. earnings season usually kicks off with airlines and big banks in the first half of the month, followed by Netflix and Tesla in the middle of the month, and other mega caps such as Apple, Amazon, Microsoft, and Meta platform will release their earnings results at the end of the month. Following Wall Street, Australian stock markets extended decline in September amid the prevailing risk-off sentiment. Financials and energy stocks were resilient, as some big insurers' shares jumped following the premium increases, and oil and gas producers' shares were strongly rising on the jumping oil prices. The subdued commodity prices continued to press on big miner stocks such as BHP, Rio Tinto, and Fibre Minerals. On the economic front, Australian monthly CPI rose to 5.2% year-on-year in August, up from 4.9% in July, increasing the probability for the RBA to keep its rate hiking cycle. At the same time, China saw an improvement in its recent economic data, which could provide a rebounding opportunity in the global commodity prices in turn lift the Australian mining stocks. Apart from the global market's impact, the upcoming RBA's rate decision and the third quarter CPI data will be critical for Australian markets. A hawkish stance of the RBA and sticky inflation could continue to pressure the local equity markets. And that was the month for September and potential market trend for October. Subscribe to the channel for future videos. All the best for the months ahead.